Hello everybody. So most trading days have looked the same for the past week-ish, but the market keeps ignoring huge catalysts, and this is not the time to stop publishing videos. This is the time to increase the amount of videos and tell you about the deals if you have some dry powders. This is a pretty amazing gift. Huge catalysts ignored by the market right now. Risk-off environment is creating a sell-off for stocks that are really, they shouldn't fall. It's unwarranted. So yesterday we had 2.5% drop in the Nasdaq. Against most of my stocks that I cover are more volatile than the Nasdaq. They're more growthy than the Nasdaq itself. I cover high growth stocks on this channel. And today another 1.4% on the Nasdaq. Remember, this compounds, and this is also on top of a catastrophic week last week. And so the market read all day. The past few trading days just all look the same. And let me go ahead and tell you my no financial advice, entertainment only thoughts. First of all, whatever you do in the market, don't get wiped out. Be careful with options. I remember reading a trending tweet on X showing this guy who had written cash secure put, who got his entire portfolio of a few $100,000 wiped out. You want to be very careful. You don't want to be margin called. You don't want to overdo any form of leverage, whether it's the form of a 2x ETF. I know these are very popular, especially among the MicroStrategy crowd. You want to be very careful with that. And I think margin, to me, my cap on margin is 10% of available margin. That's as far as I'm willing to go. But don't get wiped out. Stay in the market. Of course, this is an entertainment only thought, right? This is just entertainment, no financial advice. Keep in mind that, in my view alone, the bounce back could be just as violent as the drop. The bounce back could be just as violent. Stocks can't go down forever. They go back up at some point. How many weeks down have we had for the past 5 years in the markets, right? Ever since 2020, we've had so much volatility in the market. Nothing like the 2010s. The 2020s are looking nothing like the 2010s. They're looking much closer to the 2000s than the 2010s, if you ask me. The 2000s were very, very volatile. The 2020s are looking like that. Anyways, and bad news is good news. In this environment, keep in mind that bad news could be good news. And why is that? Because we don't have zero interest rates anymore. We have high rates, which means that if the catastrophe keeps continuing, if the stock keeps crashing, we have levers now, which is the Fed cutting. And in fact, if you look at the odds of a cut, for March, we're still likely not going to get a rate cut in March in 2 weeks. Still likely not. But if you look at the odds of a cut, they've increased from 4% a week ago to 11% a week ago. But it looks much, much more positive on the May meeting. The May meeting now, for May 7, look at those probabilities of a cut. They've moved from 24% to yesterday 35% to right now 44%. If this keeps going, it looks like we're going to get a rate cut in May. So the economy is not static. Bad news is good news when the Fed has levers, and the Fed's lever is to cut. And in fact, many people are theorizing on Twitter. I read a lot these days. This eases my sadness of seeing the portfolio down. A lot of people are saying, well, actually, this panic could be good for stocks because the Fed's going to have to do something if this continues. Again, stocks can't go down forever. At some point, people are noticing the opportunities. And if the market this hour is to be believed, it seems like there's some buying up happening. It seems like people are noticing opportunities, not staying on the sideline forever. So let's talk about the stocks that have obvious catalysts. Some of these stocks have catalysts that we've been waiting for years, and these stocks are still down despite obvious big deal type catalysts. The first stock like this is Nvidia. Nvidia is down another 10% today. It was down 8% yesterday. I'm officially calling Nvidia cheap. It's cheaper than AMD, if you ask. Look at my spread. It's way cheaper than AMD, if you ask me. I know a lot of YouTubers are very big on AMD. I find Nvidia cheaper than AMD right now. It's easy to be fearful. People make sweeping statements saying, oh, it's too expensive because it's 2.7 trillion without looking at how much revenue this company is doing, right? The revenue is 130 billion. Most of it is margin. It's absolutely insane. Gross margin is 76%. Nvidia is a cash printing machine. But make no mistake to say, how much more is it going to go up? I remember the days where Apple reached $1 trillion vividly. You had in 2016, 2017, you had pundits saying 24/7, oh, it's impossible, we'll never get $1 trillion company. And then a few years later, Apple crossed the $1 trillion mark. In my view, no financial advice, we will get $10 trillion market caps someday. This will be the norm someday. Is it going to be right before 2030 or slightly after 2040? 30, I don't know. But to me, within 5 to 10 years, we will get 10 trillion market cap companies someday. Will Nvidia be one of those? I think it's likely if you ask me, but that's no financial advice. The catalysts, what are the catalysts? The catalyst, of course, is Blackwell. Blackwell has been delayed a few times. That's it. Blackwell is coming this year. That's the hugest catalyst. The more short-term catalyst for people that are short-term oriented is GTC 2025, March 17, always announcement. There, the market always gets excited. And to me, the biggest catalyst is this tweet from Sam Altman, where Sam Altman says, oh, GPT 4.5, their most advanced new kind of model, is amazing, apparently. Feels like talking to a real person. The bad news is it's a giant model and it needs a tons of GPUs, and they don't have enough GPUs. That's why they can't offer it to the pro version of ChatGPT, because they want to roll it out to the plus tier, but they have to wait for hundreds of thousands of GPUs coming soon. And they'll use all of the GPUs they can rack up. Like, this is extremely bullish for Nvidia when one of the leaders of AI is saying they don't have enough GPUs. If you follow Elon Musk, which is arguably another leader in AI, he says the exact same thing. So the two, frenemies or former friends turned enemies are both agreeing on this, which is like they need more GPUs. And so to me, this drop is so unwarranted. DeepSeek was already crazy, but this time we are lower than the DeepSeek fears. If this stock gets under 100, I will be seriously thinking about buying Nvidia. I'm still sour about selling it early for multiple times my money. I'm still sour from selling it early, more than a year ago now. Anyways, moving on to the next stocks. MicroStrategy and Bitcoin. Bitcoin's not a stock, but I talk about MicroStrategy and Bitcoin together. So, the obvious catalyst for MicroStrategy and Bitcoin is, of course, the Bitcoin reserve. Like, you have the President of the United States who literally said on Sunday, tweeted with his own hands, obviously, BTC will be the heart of the reserve. I also love Bitcoin. I love Bitcoin. You have a president of the United States, right? Saying, I love Bitcoin, and Bitcoin will be at the heart of the reserve along with other assets. I think this is going to be market cap weighted. I'm not the only one thinking that. Bitcoin only would be the preferred choice for a lot of people. But if it's market cap weighted, quite frankly, it doesn't make that much of a difference, because Bitcoin dominance is at not all-time highs, but very, very high. Bitcoin dominance is extremely high right now. Also, I want to say, the strength of Bitcoin has been absolutely remarkable, nothing short of remarkable. You have the triple Q, the Nasdaq, down from the February 19 peak. It's down 8.5%. If you look at Bitcoin, it's down 13% from that same peak. You are looking at an asset that is really, really maturing. I remember days where Bitcoin would be down like 5 times the Nasdaq or 4 times the Nasdaq. Not anymore. So it seems to be 50% more volatile than the Nasdaq. And in the Nasdaq, you have a lot of sleepy companies, a lot of sleepy risk-off companies, like Apple, like Microsoft, right? The Nasdaq, in many ways, for a channel like mine, I often see the Nasdaq as risk-off, right? If you compare Bitcoin to risky companies, like, for example, Nvidia or Tesla, you can see Nvidia is down 18% over the same period. Tesla is down 26% over the same period. So who's the risk-off asset? Bitcoin. It's not fair to say anymore that Bitcoin is as risky as Tesla or Nvidia when I look at the latest volatility and at the latest moves. And of course, MicroStrategy is still as extremely risky. I think MicroStrategy has overcorrected over the same period. MicroStrategy is down 22%. Bitcoin is down 13%. A slight overcorrection in my view for MicroStrategy. There's a lot of negative sentiment, especially among retail investors in MicroStrategy. They're selling off the stock or they're getting wiped out, not following the rules that I say here. And that's what happens when you have people who say, oh, I'm going to sell my MSTR common and I'm going to buy the 2x MSTR instead. Or when you have too much options play and options activity. I'm pleased with the price action of Bitcoin and MicroStrategy. And understandably so, Bitcoin is a big part of my portfolio and Bitcoin is way less down than Tesla. Anyways, volatility is the price you pay for greater returns. Always remember what assets we're talking about, right? MicroStrategy, we're talking about an asset that has done 90% average annual return for the past 4.5 years. 90%, 90, right? The NASDAQ is 18% over the same period. So volatility is the price to be paid for higher returns. That's also something I want to say. Talking about the volatility, building on volatility, another stock highly volatile is Tesla. As you know, I have a big position in Tesla, and so it's tough for me to justify increasing that position, especially when that position is still way in the green, and I'm increasing my cost basis, even with Tesla trading at 270 right now. That's increasing the cost basis. You may remember the Christmas 2023 gift. Do you remember that period? If you followed the channel back then, kudos to you. But we had the stock. I remember at 169, I remember going heavy. It went more down than that, and a lot of people were fearful it would reach 100. It didn't, but it did fall under the 130s. That was a gift. We're nowhere near those low levels. In fact, compared to the 130s, we're still a double from Christmas 2023, and today we're right after Christmas 2025. So it's been 2 years, but still a double in 2 years is nothing to sneeze at. Tesla is dropping 44%. What is going on? It is dropping in the light of the biggest catalyst, the one catalyst that the market has been waiting for 7 years, which is the robotaxi, is coming in June, launching in June in Texas. That's the main catalyst. There's other catalysts, of course, the new Model Y. You have Musk being close to the U.S. president. Talking to the ears of the president. You have tons of catalysts for Tesla, but the biggest one, which is the robotaxi, is being entirely ignored by the market. I do not understand that. The market should be crazy with excitement, given that robotaxi has literally been the talk of the town for the past 7 years, and these talks has been the annoyance of Tesla bears for 7 years, and it's finally happening. So anyways, I don't get that. Let's talk about SMCI. Okay, so SMCI, as I'm recording this video, the market seems to be turning around. So it's up 10%, but when I was making this video, when I started and selected SMCI for a video, it was roughly flat, trading at $36. You can see at my screenshot, it was trading at 37. So volatility is alive and well for SMCI. That's why a lot of hedge funds actually own SMCI, like I said, for the gamma trade. A lot of hedge funds own MicroStrategy because they want to make money on the volatility. They don't want to bet on direction. They want to bet on movement. Same for MicroStrategy. SMCI is fortunately or unfortunately, depending on your lens, included in that trade often. Actually, a lot of these 2x brokers also have ETFs on SMCIs. Anyways, the point is SMCI has obvious catalysts too. They filed for their 10K. That should be included in the stock price. It was not. They're not going to be delisted from the NASDAQ because they filed for the 10K. The stock price didn't bounce or anything. And then the guide, they just delayed it a little bit because of Blackwell, right? SMCI is the liquid cooling giant. Last call, they claimed having 30% market share in liquid cooling. They're the giant. Blackwell needs to be liquid cooled. Like I said, the shorts or the bears still don't make liquid cooling equipment. It's SMCI who's the leader of liquid cooling equipment, and Nvidia's sales are going to go through the roof because of Blackwell. And in my view, SMCI sales will go through the roof because they will be a huge part of setting up Blackwell servers. And so they guided for $25 billion in 2025 in revenue, and they guided for $40 billion in revenue in 2026. And you're looking at a company whose enterprise value is $22 billion, so trading at less than a one-time sales, and pretty soon 2026. It's trading at less than half the 2026 sales, roughly. You'll forgive me for the rounding error, but roughly about half the 2026 sales. So I think this stock is dirt cheap, especially the rule of 40 is a 71, but you can see EV over GP over RG is significantly cheaper for SMCI. Yes, they had accounting issues, but they got BDO to sign on the books, and they filed the 10K. So at some point, how many times does the CEO have to come out and say that the numbers were good? I think he came out something like 4 or 5 times. How many times does he have to come out? Is it 10 times? Is it 20 times? Or is it never? I mean, it's very annoying. Last stock with obvious catalyst is Celsius. Celsius is trading at just under $26 here, $25-ish a share. It's as if they didn't report the most amazing news in the beverage business that I've seen personally since I've invested in Celsius, which is they're buying Alani Nu. They're buying their main competitor, the main competitor that could have cast a shadow on their sales to women. That main competitor is being acquired, and it's being acquired at a good price, by the way. If you look at the price to EBITDA they're paying and the price to sales, it's nothing bad. Look at my full video that I made on this. The market entirely forgot about this announcement. Mr. Market entirely forgot about his excitement about the announcement. In fact, the stock shot up well past $30, and then it went straight back down for unrelated reasons. I am sorry, the Trump tariffs on agriculture will not impact Celsius. Yes, it's a beverage, but Celsius is not a juice, right? It's not agriculture. And they still do most of their sales in the US, so tariffs are not going to impact them. And even then, they just ship a syrup, right? The sodas as fully manufactured locally. So I don't understand why the stock is down so much, especially when the obvious catalyst that just happened, they're buying their competitor. So anyways, trying to infuse some positivity in today's red market. Actually, I'll see if it's still red as soon as I'm done recording this video. But thank you for watching. This was not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.